Hello and welcome to Coffee Break Accounting with me, Becky Brooksbank. We are starting on a new series now, Series 3 of Coffee Break Accounting. So if you haven't grabbed your cup of tea or coffee, then please press pause, go and do so, and come back for about 15 minutes of jargon-free accounting support for your business. So, as I've just said, we have just launched into Series 3. So for those of you who've been following for a while, you'll have remembered that Series 1 is in relation to the profit and loss account, and we looked at everything possible, all the way from sales through direct costs, net profits, right the way down to gross profits, and understanding some of the implications along the way for your business. Now, if you've missed Series 1, you can catch up either on our website, www.charworthassociates.com, and go to the workshops and events and scroll to the bottom where you'll find all the videos. And similarly, you can head over to YouTube, search for Coffee Break Accounting or Charworth Associates, and you will find all our videos on the YouTube channel. So after Series 1, we headed into Series 2, which was all about simple systems. And I wanted to show you in that series that you can create a simple bookkeeping system to help you understand your books without too much of a hassle. And simple systems just allows us to think about our numbers a little bit better and start getting our head into gear for understanding them. So this series 3, is all about beyond the profit and loss account. So we've done quite a lot of work on the profit and loss account and how we're going to get our numbers sorted. And now it's time to take that little bit step further. So we're going to start to explore some of the other financial numbers that are out there and some of the other reports that they link to. Because it's not just important to understand profits, it's important to understand a little bit more about your business. So we're going to go beyond the profit and loss account in Series 3. And we are going to keep it as jargon-free as possible, as always. So it's important that you have a good understanding of your business numbers, but I don't want to baffle you too much with jargon. So I will promise to keep it as limited as possible and to explain when I am going through. And also I'm going to break it down into bite-sized chunks for you. So there's about 8 sessions to this series. It's a longer one than the others. So today we're going to kick off with episode 1 of Series 3, which is all about cash accounting. Okay. And until we understand whether our business is going to take a cash accounting basis or a traditional method, there's no point in talking any further about these other numbers. So that's what we're going to jump into today. Okay, so apologies, just going to move the cursor up a little bit further there. So what is cash accounting? So I promised jargon free, so I'm going to cut the jargon out. Cash accounting is a method of recognizing your transactions in your books based on when the transaction occurs in your bank. Okay. So we have Mr. John Tapp, our case study plumber. So for those of you who aren't familiar with Mr. John Tapp, he is a case study that we followed through the series thus far. So in Series 1, we took a good look at his profit and loss account and used him to create some transactions in our mind. Okay, and we're going to come back to John as the series goes on. So let's take a pause here and think about John. John is the type of business owner who's very busy, this, that and the other. He's self-employed. He's going to do things as simply as possible. And one of those is to use cash accounting. So what he's going to do, he's going to go down his bank statement every month and he's going to look at the cash that's come in and he's going to look at the cash that's gone out. And he's going to match those transactions with whatever they are for. So it could be that Mrs. Brown has paid him for doing the plumbing in their new bathroom. She's physically paid him, so he's going to recognise the £5,000 she's paid as an income at that point in time. Similarly, through the month, he's paid for things like mobile phone bill, 30 quid here. He's paid Jack, who works for him, £100 for his labour. He's physically paid out of the bank for some fuel and bits and bobs. All those are cash transactions, so he's going to recognise those in the month that they went in and out the bank. As simple as that. That's cash accounting. Okay. So one of the pros, as we've just touched on, is it's really simple and such a straightforward method of measuring the cash in your books. Okay. Now, because you're using a bank statement, you can tangibly see what cash you had at the start of the month, what cash you've got at the end, what cash you've got in the bank at any point in between. So it gives you a really clear picture of how the business is doing from a cash perspective. You can easily see how your cash is being used by simply just reading down the transactions in the bank statement. Okay, so those are the main pros to cash accounting. Now the cons, okay, so the con, it can obscure the financial position of the business. So imagine that John's looking at his books for April, and on the 29th of April, he was getting ready for a job that was going to happen in May. Okay, so he purchased the whole bath suite, the shower tray, the toilet, the shower screen and everything else to fit a bathroom, and he's not going to get round to fitting that bathroom until May. Okay, but yet at the end of April he has purchased all those things, so he might have £1,000 of materials costs going out at the end of April. Now that's going to reduce his profits by £1,000 because he's bought something under the cash basis. However, the sale is not going to happen until the next month, when he actually physically gets in and then charges Mrs. Thomas, whoever it is, for the job that he's doing. Okay, so as you can see, there's a slight discrepancy between when he's buying things and when that gets he gets the recognition of the sale. So the one thing you can I always say, cash accounting really doesn't work for businesses where they are carrying lots of inventory, because if you're carrying lots of inventory or stock, you're buying them at periods in time and you're not getting the benefit till potentially significantly down the line. Okay, so that's one of the cons. It doesn't work for businesses that carry lots of inventory, and it can obscure the financial position of the business. Okay. The other thing is that banks quite often, if you're looking for funding, for example, or you want a loan, quite often what they will do is they will request to see the accounts, and they will expect to see them on a traditional method basis. Okay. Now the traditional method I mentioned there is just anything that isn't the cash basis, okay, at this point in time. And we're going to come on to the traditional method of accounting next week in Coffee Break Accounting Series 3, Episode 2. So, yes, so the banks might be somebody want to see traditional accounting rather than cash accounting. And HMRC also have a little rule as well, which is another con that brings us on to our final point here. Who can use cash accounting? So HMRC say the cash basis can be used for your tax purposes if you run a small self-employed business. Okay, so they specifically exclude limited companies from this. They expect limited companies to work on a traditional accounting method. Okay. But if you're a small self-employed business or a partnership, then you are able to use the cash basis, cash accounting, okay? And you need to have a turnover of less than £150,000 in a financial year to still qualify for that. Okay, so that's what HMRC say that you can do. If you tick both of those, then you are all fine to use the cash basis. But obviously, if you fail one of those, then you need to adopt the traditional method of accounting. Okay, so as I've just said, we will have a look at the traditional method of accounting next week. And once we've looked at that, that's going to start opening loads more questions about all these reports that are beyond the profit and loss account. Okay, so your takeaway task for today, if my slide is going to turn over, just 1 second, let me see if I can get, there we go. So your takeaway task today is to go away and have a read of the business advice on HMRC's website. I cannot stress enough how good gov.uk is if you want to know more information. And over the years, they've made it really simple, really bite-sized and everything else. So I've just picked up the cash basis link that they advise on their website. So if you want to have a look, here's the link down on here. I suggest you head over to HMRC and have a quick read, and then decide whether you and your business will be under the cash basis or whether you'll be under the traditional method of accounting. So next week, as I've said, we are going to have a look at the traditional method of accounting. So by all means, if you want to hop in next week and hear how things get a little bit more complicated, but I'm going to make it easy, so have no fear, then please feel free to catch up with me next week for next week's Coffee Break Accounting. Wishing you all a great week, everybody, and take care, and see you all next week. Bye for now.